Welcome to the Cashflow Project podcast. Are you looking to better your financial situation by increasing your cash flow? Too busy to hunt for real estate deals or don't know where to start? Then you're in the right spot. Join us as we dive in and talk about investing for cash flow using multifamily real estate.
Welcome to the Cashflow Project podcast. I'm your host, Steve Pieros with Tri-City Equity Group. Today, we've got Michael Arries on the show. Michael is an experienced advisor in the field of precious metals, having traded gold and silver for almost 25 years. In 2010, he embarked on over his professional career with McIlvaney Precious Metals, a family-owned business with a 50-year legacy in the industry. He's here. He's going to tell us how we can protect against the theft of insane money printing, how we can maybe diversify our portfolio. We're going to pick his brain about precious metals in general. Michael, welcome to the show.
Yeah, thanks for having me, Steve. Appreciate it. Good to be here.
Yeah, no, absolutely. Like I said, I'm excited. And we talked a little bit about this off camera, but I'm excited because we really haven't had much in the ways of, let's say, alternative assets on the show. A lot of our listeners are into hard assets, of course, but the vehicle for that being real estate, whether that be commercial real estate, residential real estate, but primarily real estate. And they're looking, a lot of times, looking for ways to kind of preserve wealth. Maybe they're business owners or they have had success through fixing and flipping and that kind of deal. But at a certain point, you do get to a point where, hey, you know what? I need to protect my wealth, right? I've worked really hard for this.
Yep.
What can I do here? So I know we'll talk a little bit here on the show about that. But before we get there, for those of our listeners that may not be familiar with you or your company, give us a little bit of your background. How'd you get started? Give us a little bit of insight into the company as well.
Yeah, well, I appreciate that, Steve. And when we talk about gold, it's something that everyone needs and everyone should have, because if you use the dollar, you should have some gold for your savings to protect the purchasing power, since it just gets printed out of thin air. So for myself, I grew up in Colorado. The company's in Durango, Colorado. And really, since I was a kid, my parents got the McIlvaney newsletter and kind of could see some alternative ideas on what's going on in the world and with the markets, and started buying silver even before Y2K. I got some silver with high school savings when silver was $5 an ounce, and now it's $30 an ounce. So it's amazing how much I got back then for just a little bit of cash compared to what I get now. So that's been a good investment. But I always had an interest in not only alternative assets, but just kind of an alternative view of the world. We were looking at chemtrails 20 years ago and saying, that's not right. There's something wrong with that. You're a conspiracy theorist. You're crazy. And now, yeah, no, we're geoengineering. We're trying to stop climate change. Yep, that's them. We've been doing it for a long time. So we're just kind of, I guess I've been kind of ahead of the curve on just looking at stuff differently, not believing what the news says. And so gold and silver feed into that. It's like, oh yeah, the government's lying about employment. They're lying about inflation. The numbers are way off. It's way worse than we think it is. It hasn't been noticeable enough for people to revolt. Maybe since COVID, it's starting to get more noticeable. But in the last 100 years, it's been a good time to own gold and silver versus sitting on cash. If you have a real investment, a real tangible, something that has value like real estate, great. If it gives you cash flow, great. If you just have cash in the bank, part of that's better off being in gold and silver because it goes up over time with inflation. So that's really the main thing, is have some of your liquid assets protected. You get that tangible quality like real estate, but also regardless of the main focus of your audience, Steve, every single person needs gold and silver. We all use a paper currency from some country or another. All of their central banks are printing it out of thin air, which devalues it over time. Gold is limited in supply, and it is the one form of money that maintains its value over time. So that's the money, the currency to have as part of your long-term saving.
Yeah, no, for sure. I mean, and there's a few different things there too. I feel like post-COVID, we're definitely experiencing, that was eye-opening, I think, for a lot of people in a variety of different ways, whether that be health protection and health aspects, that kind of deal. Hey, if that spurred you to take better care of yourself, awesome, right? Like that, yes, let's do that. But wealth in general, let's say, is multifaceted. Health is one of those things, but also your physical, tangible wealth. And people saw, right? We saw, for one, how fickle, let's say, the markets can be with extreme volatility. Hey, if you would have had a portion of your savings, let's say, in precious metals, awesome. You can weather the storm. It's been a store of value for, thousands of years, right? And then two, like you said, they feel like for a lot of people now, obviously we came off of the gold standard a long time ago.
Yep.
The sheer amount of money that has been printed, well, the sheer amount of currency, let's say dollars around the globe, has done a number. Everybody, they focus on CPI and that kind of gets the headline news, but well, what is the driving factor behind that? right? And
Yeah.
one of the factors there is, of course, because they have access to the money printer. Like, you don't have access to the money printer. You're right. You and I, is as much study as we can do and implementation we can do, we don't have access to that,
Yep.
right? So
And
this
it
provides a
makes
good way to do that.
it makes the debt cheaper to pay off for the government. So like imagine if you could mortgage a house, not put anything down, and then over in your backyard, you get to print money to pay the mortgage payment and pay down that debt. That's a pretty good deal. That's what our government's been doing forever. So they can print money and make their debt easier to pay off. And who pays the price? We do through inflation. They don't pay the price, we pay the price until it gets to the point where people have had enough and the system doesn't work anymore. And we're starting to push those limits. And people are seeing it. The government can say, oh yeah, CPI is 4%, but you can look for real and groceries are up 20% year over year. And that's a big deal. That's a really big deal. So yeah, so it's about wealth preservation, having real things, having things that maintain their value. And as far as money goes, gold and silver are the most liquid, most portable, easiest way to do that. It's a better form of cash than dollars if you're going to be sitting on it for any period of time.
Yeah, no, for sure. And that would be something too. Obviously, you're overseeing people's portfolio. You're helping them with wealth management, asset protection, that kind of deal. How have you seen, let's say, even where we are now, like the current economic picture, how is that factoring into, let's say, where your clients, how they're investing, or have you seen a bigger push into precious metals the last few years, or are they pulling back? Like what are you seeing?
Yeah, I have. I mean, really, since 2017, we've been selling more and more gold every year and topping that out. So it's just been increasing the last 6, 7 years. So more and more people are kind of becoming aware of what's going on, are maybe getting off the fence, maybe exploring gold and silver for the first time. More folks are continuing to add if they maybe had bought 20 years ago. Oh, yeah, let's get some more. So yeah, it's been something where more and more people are waking up, and it's been an increasing amount of business over the last number of years. And yeah, I think it's just starting to see the reality of things set in. So
Yeah, no, for sure. And then obviously we're some of our listeners, again, this is going to be the first time they're kind of having exposure to precious metals in general. We're
Sure.
talking, hey, gold, silver. Is that really the only options? Do you recommend anything else? Is that what we should be focusing on? Or, if I'm completely new and I'm
Yeah.
just getting exposure to this, like, what about some of this other stuff? My watch is titanium or platinum or whatever, you know what I mean? Is there anything else I could be buying or whatever?
Yeah. Well, a couple of things. Yeah. As far as what else to buy, and then also we should talk about how it's physical. It's not necessarily ETFs. As far as the precious metals go, gold and silver really are the precious metals. They're the monetary metals. They're the ones that are a store of value. They're a currency. They're real money. So those are the ones we would tend to focus on. There are other ones like platinum and palladium have a little bit of a precious metals component, but not a ton. They're mostly industrial metals, mostly used in the automotive industry. A little bit, maybe 10% of their use is coins and bars, and they're just hoarded for their value. And they can do that. Platinum is 10 times more rare than gold, but just not as practical as a precious metal because it's more useful in catalytic converters in cars. So platinum can be an option to a small extent. Gold and silver really are the main ones you want. Right now, even more silver than gold. Silver is probably going to make a bigger move percentage-wise as it catches up and gets back to its old high, and probably will outperform gold. But those are the ones. Anything else is going to be a industrial metal. If you're talking about titanium, cobalt, copper, just anything else is going to be a commodity, an industrial metal, something where you're not necessarily going to take possession of it. You'd have to buy a pallet's worth of it, and there's moving it and storing it is impractical. With gold and silver, they're a very dense store of wealth. They're very small. You can take delivery of it. And that's the other part is we recommend having physical gold and silver, like actually owning it. So not an ETF. That's a piece of paper. You're speculating on price. You don't actually own any gold and silver. What we do is we ship out coins and bars to people, or we have them stored in a depository. Yep, exactly like that. And you can also buy through an IRA. If you have a retirement account, you can move it into physical precious metals. That's also stored at a depository and held in trust for that. But yeah, just like the coins you're holding up, Steve, I mean, it's small, it's easy to store. You have a lot of value in those things.
For the camera.
Yeah. Got to have the bling factor here. But yeah, you own it, and see, there's no counterparty risk with that. That's the big fancy term you can use for your listeners, is that silver coin has value. No one else has to say it has value. Our government has to say you have to accept the dollar in payment of debt. or if you have a stock or an ETF, there's someone else involved that has to do their job and keep their promise for you to get value out of that. If you have that silver coin in your hand, it is what it is. It's a piece of silver and it has a certain value on the market and you have control over it. So that's where the insurance comes in. That's where the wealth preservation comes in, owning it physically. And then mainly gold and silver. And here's another little sidetrack, but also could be a topic we could talk about is actually your exposure to gold and silver, the mix of gold and silver that you have. We will change that over time because they take turns outpacing each other. They don't go up at exactly the same rate. They'll go in the same direction for the same reason, but sometimes gold outperforms silver and sometimes silver outperforms gold. And it happens in pretty predictable cycles, and we can measure how far they go either way, looking historically at what they've done. And so we'll use that to our advantage to help people gain ounces, to have an arbitrage trade where you compound ounces. So it'd be like if you had a particular house that, oh man, in Seattle went way up, man, we can sell that and buy 3 houses in Oklahoma. It's that kind of arbitrage trade where, yeah, silver can outperform for a time. And at a certain point, it's like, okay, that's about as far as it usually goes at outpacing gold. We'll trade some for gold and get some free gold, and then go the other way when maybe gold outperforms for a time and get some free silver back. So yeah, that's part of our strategy and something that most other gold and silver companies don't try to do or don't necessarily talk about.
Yeah, no, actually, I really love that because that's part of, we'll hear that a lot, right? Like, oh, I have a well-diversified portfolio. And usually they're talking about stocks, bonds, and all this kind of stuff. But what we're talking about here, right? It's like, okay, I love your example of that, right? Like, okay, well, hey, typically if I'm going to have some, let's say, property in one market, and even this is really just goes to coming back to expanding, let's say, the listeners' idea of what's possible, right? And talking about that arbitrage play. Okay, cool. Maybe I did have a huge run up in one market. Okay, well, you know what? There's going to be times, just like Michael was talking about, there's going to be times, let's say in the cycle of, let's say he's talking about gold and silver, but we can use this for different asset classes also. All right. Maybe you know what? Maybe you feel like, hey, you know what? The real estate market right now, it's just too toppy. I don't like the lending environment. There's just a little too much volatility in certain markets, or maybe the markets that you typically like. That's great. That's all right. You know what? Why don't you go ahead and cash in, right? You can take advantage of the run up that you've had in certain asset classes. Go ahead and start an IRA, or just move some of that into like precious metals. Let's say, go buy some gold. I don't have any gold coins, just silver. But again, guys, you don't have to be locked into one way only, right? Like have an understanding of the value we're talking about. I'm kind of picking Michael's brain here about, hey, what about palladium or titanium or some of these other metals? The reason that gold and silver has so much value, part of it anyways, is like the network effect, right? Is just the sheer amount of adoption. I can literally go take this. I'm going to be out of the country here in about a month. I can go take this with me, no matter where I go in the world, and they understand what this is. They'll understand what gold is, right? Because they've been trading in it for thousands of years. It works in their currency. It works in their local market, just like it works in mine.
And to your point, Steve, more than half the demand for gold around the world, around the globe, comes from India and China. So it's not even like America's the biggest market. So around the world, there is enough understanding and desire for gold that it can be sold anywhere. We can make a market anywhere. Someone might take gold from here and find a market elsewhere because there's opportunities. So you're always going to be able to get rid of it here or elsewhere. And the interesting thing too is most other places, it's culturally long-term wealth. They buy it and they hang on to it. So the more that China and India buy, and Southeast Asia and the Middle East and Dubai, the more that they buy, the less there is on the market. We ain't seeing that for a long time. We're not going to see that again for a long time.
Yeah. No, I will touch a little bit about, let's say, digital assets here, but in a minute. But I love one of the channels I follow for like macroeconomics was George Gammon. And shout out to George Gammon and his show. But I know they recently did because he's a huge Bitcoin guy, digital asset guy, but he's also, I know, into precious metals. They took a trip recently down to South America and to say, okay, well, we're going to put this to the test. Can we use this digital asset like along our journey through these towns and through these villages and whatnot? Can we use our digital currency, right? Because that's a big shift the last handful of years, right? Can I use that actually functionally as a currency, right? Can I a medium of exchange? And they had a really difficult time doing it, but they could trade in precious metals. They happen to have some silver coins. They had some silver eagles with them. And that was something that they would find. Hey, you know what? You find a vendor, I'll take that. I may not be able to speak the language, whatever your home country is, but guess what? We can speak a common language right here.
Yeah.
Right.
Oh, you
So,
want this? I'll take this silver coin here. We're good. Yep. It
right.
doesn't have to be in the same language. Yep.
Yeah. Yeah. So then the adoption piece and to this to your point there, Michael, like, yeah, again, once you get international, again, this works everywhere.
Yep.
Right. Now, kind of as you're, again, as the market has kind of shifted here, do you recommend like a certain, for the say I'm a listener and okay, cool. Like, yeah, I'm sold on you guys, the idea of wealth preservation and having a portion of my portfolio into precious metals. Is there a certain allocation that you would typically recommend, like what gold or silver, or like just an overall portion of my net worth? Like what's kind of a typical recommendation? And obviously I know that depends, but
Yeah. Yeah. And I've got some recommendations. It'll vary from person to person depending on what they have or kind of their level of distrust in the government or in the dollar. So I would say at a very minimum, looking at net worth, if you have a lot of illiquid net worth, at a very minimum, shoot for 10% being in gold and silver. If you have more liquid assets, I would say even do as much as 25% of your liquid assets in gold and silver. So it's going to be more than, say, a traditional financial advisor. They might say, oh, yeah, gold doesn't do any good. Put 5% in gold and forget about it. But I think that is totally wrong and just missing the point completely. With as much inflation as we've had, how much do you want to have that is protected from prices going up? I just think about it like if I'm lost in the woods, I don't want a sack lunch in a paper bag. I want a survival kit with like a fire starter and a water filter. Like I want something where I'm going to make it through this mess and have time to get rescued. So I think about that with my gold and silver as insurance. If we're going to have economic recession and massive inflation, do I want 5% of my money in gold or do I want 20% of my money in gold? Yeah, I kind of want to have as much as possible. So it can be a range depending on your feelings. I have folks that they're happy with 10 to 20% in precious metals. I have some folks that they're like, I don't trust the dollar. I don't trust the government. I don't like where things are going. They might put 40 or 50% of their liquid assets in gold and they're going to wait and see what happens. They're going to wait for stocks to crash and then reallocate later. So it can be dependent on that, but 10% bare minimum just to preserve some wealth and have what is 5,000-year-old money, maybe up to 25% to say, yeah, I don't like where things are going. I want a pretty decent chunk that is safe and that can bail me out if things get bad.
yeah, no, 100%. And like I said, it's a huge, again, guys too, and none of this is always going to want to consult with whoever it is that kind of help guiding you along the process. We're just two guys talking on the show. None of this is financial advice, right? You can take with it, what you want. But I think a lot of this also too is going to depend on where you're at, like let's say in your investing career. And to Michael's point too, how I don't want to say fearful, it's just how mindful of you are you, let's say, of the global picture, right? A lot of stuff going on in the world right now.
Yep.
A lot of different moving parts. This could also be impacted by where you are. Most of our listeners are going to be, based in the US, but if you're not in the US, right, there's some countries that have massive inflation, right? And so like you're going to be way better off if you're holding a much larger percentage, let's say, of your portfolio, of your wealth in precious metals, in hard assets in general, right? Because it's what it is. It's a hedge against inflation. It's a hedge against poor leadership, money printing, and all that kind of stuff. But definitely, if nothing else, let our conversation here kind of stir you to like, you know what, maybe I should kind of take a look back and make sure that I'm good, make sure that I'm not just sitting on all cash, all sitting on all paper, currency. Yeah. So,
yeah, you got it, Steve.
Well, I want to take your brain real briefly. Obviously, digital assets, that's been a huge topic here the last several years for sure, but it's gained steam quite a bit. What are your thoughts on Bitcoin? And since that's the big player in the digital space for sure. What are you? I mean, obviously you got people that are both extremes, right? Huge gold bugs or the Bitcoin maxis. Are they even at odds with each other? What are your thoughts on that?
Yeah, not necessarily. I wouldn't necessarily pit them against each other. I think they have two different roles to play, and one doesn't necessarily replace the other. So with gold, you have money that has been a store of value for 5,000 years. So every empire and currency that has come and gone, you can still fall back on gold and have your wealth, and it's still around and it's still doing that. With Bitcoin, you have something that doesn't have quite the same track record. It's not tangible. You can't touch it. You can't put it in your pocket necessarily. You can have it on a hard drive in your pocket, but extreme example, you can say, well, if electricity goes out, you can't access your Bitcoin. You can still access your gold. So may not get to that point, but nonetheless, you've got something real with gold. But with Bitcoin, it's not like you can't own it. So with that, it's an alternative currency where you can move money across the ocean in like 5 seconds. You can't do that with gold. It's a lot more expensive, a lot more time consuming. So your gold is this wealth protection that you have with you that's always there, that has a lot of features. Bitcoin's just an alternative currency that is outside the dollar system. It moves very fast. And again, to your previous point, there are places where you go and they're not taking Bitcoin, but they know what a silver coin is. So they just have different roles to play, I think. I think it's worth having both. I wouldn't look at Bitcoin as a replacement for gold. Like, oh, we've got digital gold now. We don't need gold anymore. I think that's a little bit short-sighted, and I think you still want to have the advantages that gold has, but I'm not necessarily against one or the other. They just have different roles to play. Neither one cancels out the other. They've got different advantages, and you wanna have both.
Yeah, no, 100%. And this can be even the same way, right? This can be a part of, like, let's say your investing strategy, because Bitcoin, digital assets and whatnot, I mean, it's hyper volatile, right? That's probably the most volatile asset class that we have in this moment. Why not lock in some of your gains and kind of do what we talked about earlier with some of the real estate? Hey, you know what? I'm going to hold as a hedge over here in this hand, some precious metals, but I want to play the markets, you know, with the digital assets because they're super volatile, right? Hey, if this runs up a big amount, hey, why don't you go ahead and peel off a portion of those gains? I'm going to buy some more precious metals, right? And you kind of do the same arbitrage play where, hey, I'm just going to hedge against any losses. I'm just going to continue to pile away in real estate or in precious metals while I'm over here on this side playing kind of the more volatility, playing the market. Yeah. So I think I fully agree with you. I don't think they're at odds with each other. In fact, every smart investor really should kind of have at least a basic understanding of all these potential asset classes, just so you can make an informed decision, right? And just kind of have a well-rounded portfolio. Well, this is a part of my show where we dive into something, what we call our fire round. Just a little bit more rapid fire, brief Q&A. Is that something you're up for?
Yeah, sure. Let's give it a go.
Awesome. All right. First question. What would you consider your superpower to be?
My superpower? Oh man. Can trivia knowledge be a superpower?
Sure. Yeah, absolutely. Hey, that can win you money if you're on the right game show.
Yep. My wife would consider it a huge annoyance, but I'm hard to beat at trivia. So if it can be a superpower, then maybe that's something. But also, it's kind of pointless, not necessarily something to brag about.
Oh, you can be the life of the party, that's for sure. All right, awesome. And next question: what's the biggest lesson? Just total switch of gears here. What's the biggest lesson that you've learned over your career thus far?
Biggest lesson. I think it's really a matter of listening to people and trying to care for people and really putting relationship first over transaction. I've had to learn that through college, just interacting with friends and always being all about the program and the process. And so really over this career too, I've seen it's really about helping people and putting their needs first and putting real relationship first over business, and it takes care of itself.
Yeah, that's awesome. That's great advice, and I love that. All right, next question. What's your best book recommendation for us real estate investors? It's Rich Dad Poor Dad, right? It's Our Purple Bible. Do you have a favorite book recommendation, let's say in the precious metal space, or it can be about anything, business, life, whatever your go-to is.
Yeah, I think I'd give you two. So business and then personal. Business one, I'd recommend probably any of Jim Rickards' books. His predictions are not always right on how he thinks things will play out, but his explanation of the problem and what's wrong with our system have always been really good. So his Currency Wars book or Case for Gold book or whatever it is, any of his stuff is really good as far as understanding just what's wrong with our system. On a personal book recommendation, man, I have to go with The Lord of the Ring. It's just it's a classic fantasy novel, but there's such good character development, and I think the movies did a really good job of just showing us. I mean, here we are in this like woke Hollywood era. You go back and look at Lord of the Rings, and that's what real men and women were. I mean, they were tough, they were strong, they communicated, they were brave. It's totally different. You look at some of the characters there. That's what we need more of nowadays.
Oh man, 100%. Geez, I used to love going to the movies like all the time. And I feel like that's like one of the pinnacles, right? Is Lord of the Rings. And yeah, now I can't even tell you the last time I went to the movie theater.
Yeah.
None of the stuff out there is worth going to. But anyway, all right, next question. For the busy working professional, somebody trying to work towards financial freedom, what advice would you have for them?
Work towards financial freedom. I think a lot of it is working hard and really just budgeting and spending less than what you make and being able to save and invest. I think that's really what it comes down to. There's got to be extra that you can put away and grow for the future. So whether it's making more or if that's not an option, spending less and having enough to put away. And so sometimes it takes discipline. It takes living not the way you want to now so that you can live the way you want to later. So that's really the thing. It's just how you spend your money.
Yeah, no, 100%, 100%. I actually love the idea too. I heard this from one of our fellow real estate investors. What he does is, and I'm glad I kind of had these silver eagles handy, but I didn't even think about that for a show, but what he would do is, because I've got a couple of young kids, he would basically, for every one of their birthdays, he would buy them for every year that they were alive. He'd buy them Silver Eagle. So, okay, hey, you're 10 years old, then guess what? You're getting 10 of these guys. And so it's like, talk about savings, talking about starting them young. And even if you're just doing it, because a lot of this, guys, it's not even necessarily about you. It's a mindset. It can be wealth preservation. It's going to be about potentially the next generation. So you start your kids off young, even if you're putting it away, like maybe you're not necessarily buying for yourself, but you know what? I'm going to buy it for my kids. Just knowing, gosh, what is our economic picture going to look like in 20 years, right? If the amount of current inflation that we've seen the last 5 years, right, has been insane. Think about 20 years out, right?
Or Social Security being technically bankrupt by 2033. So where are we going to get that money from except printing it out of thin air?
Right. Yeah. No, exactly. So yeah, no, I love that we're having this conversation today. It's incredibly relevant. Well, Michael, if our audience wants to reach out to you, they want to get in touch with you, and they want to pick your brain about precious metals or maybe even just Lord of the Rings, what's the best way? What's the best way for them to get in touch with you?
Yes, anyone that wants gold or all the nerds, do call me. The best way to reach me, call or text me. My phone number is 970-459-4611. I know you'll have that written down too. 970-459-4611. I like to interact with folks directly, so call or text me. We can talk about what's going on in the world, what you're looking at, and how to tailor things for your goals and any questions you have. So I'm available.
Awesome. All right, Michael, well, I really appreciate you coming on the show today. I know the audience has appreciated kind of a different lens to look at things through. And so I hope it's been eye-opening for a lot of our listeners. I really appreciate you having on. I've enjoyed our conversation, and we'll look forward to circling back with you in the future.
Well, I hope so, Steve. Thanks for having me on. It's been great chatting with you as well. So thank you.
Awesome. Well, have a great day. We'll talk to you soon. Aloha.
All right. Bye.
All right. Great conversation with Michael Arries over at McIlvaney Precious Metals. If you guys are interested in learning more about precious metals, gold and silver, and kind of how that can be a hedge, and really just investing in some kind of alternative asset. Again, I'm a huge real estate guy, but I do have some precious metals as well. It's just kind of a way to lock in the gains. It's nowhere near as volatile as, let's say, digital assets, although I own those too. It's definitely one of those things where it should be a portion, I think, of every investor's portfolio, just as a wealth preservation piece, as a legacy piece. That's something you can leave to your kids and your grandkids, which is really, really nice. Well, guys, if you haven't subscribed to the channel, for one, what are you doing? Go hit the subscribe button. We'd love to be able to keep you up to date with all of the latest episodes. If you guys are interested in investing with us on the real estate front, go to trustediequity.com. You can learn more about past projects and really just keep up to date with what we've got going on. We're always got projects going on, and we'd love to be able to have walk you through the process and kind of have you join us on this exciting journey of real estate. We also host a monthly meetup. So if you're here on Oahu, if you're visiting, you're out on vacation, or if you're on island, you want to connect with other like-minded investors, people who just want to get better with themselves, get better with their businesses, their lives, make sure to join us. You can find us on Facebook, Honolulu Multifamily, and more. You can find us on meetup.com, Bigger Pockets, really multiple venues to be able to find us here locally. Of course, if you're finding value also, make sure that you share an episode. We really appreciate that. We help get the message out to as many individuals as possible. We'd love a 5-star review as well if you guys are finding value. Guys, we also have our conference coming up, the Hawaii Millionaire Mindset Conference. It is coming up super fast. So July 10th through the 13th, that's out at the beautiful Four Seasons in Kolina here on Oahu. So make sure that you're making plans to be there. It is the #1 conference in Hawaii for entrepreneurship, business, real estate investing, you name it. You're going to meet some amazing people there. We've got an awesome lineup of speakers that are coming in. So make plans to be there. You will not regret it. It's going to be a life-changing event. Guys, that's going to be it for today. We'll see you on the next episode. Go out, take some action, maybe buy some silver or some gold, and we'll talk to you on the next one. Aloha.